Just as assets can be divided into a current portion and a non-current portion, liabilities can also be classified as either current or non-current. So what is a current liability? Well, a current liability is basically an obligation of your firm that is going to require one of two things. It's either going to require the use of current assets to extinguish it, so the use of current assets, or it's going to require the creation of other current liabilities to extinguish it. So this definition is a little bit vague here. So let me give you a specific example of something you might think would be a current liability, but not necessarily would be. So if you had a bill for something that is due in less than 1 year, now you might assume, okay, that's a current liability. That's going to happen in the next year. That's current. Well, it depends. It depends. So that we've got an obligation. We know that the bill's an obligation, but is it going to require the use of current assets, or is it going to require the creation of other current liabilities? Well, that depends on what the firm's intention is. What if the firm decides that it's going to issue some long-term bonds in order to pay that bill, that's how it's going to deal with the bill? Well, in that case, long-term bonds, they are not a current liability, so it's not some other current liability that's being used to take care of this bill, and they're obviously not current assets. So in that case, even though this bill might be due in the next year, it wouldn't necessarily be a current liability. So remember, it's an obligation, but we have to think, okay, not just is it due in the next year or not, but is it going to require the use of current assets, or is it going to require us to create other current liabilities to extinguish it? So let me walk you through some examples, some common things that can be a current liability. So one very common thing you'll see is payables. Now, in terms of payables, there are a lot of different types. One is accounts payable, which I'll just abbreviate A/P. And accounts payable is basically you get a bill from the electric company, you haven't paid it yet, or you get a bill, from somebody you bought things from, and you haven't paid that yet, and so you've got this account that you have to pay, and you haven't paid it yet. That's an account payable. Now, another thing could be wages. So you've got salaries payable, something like that. You could have tax due. You got a tax bill, you haven't paid it yet, so you have tax payable. And another type of current liability that is very common is to have some kind of unearned revenue or some kind of unearned revenue, subscription revenue, something like that. Basically, you've collected money. You've collected some kind of money, but you haven't earned it yet. So collected, but not earned, right? So you're selling magazine subscriptions or something like that, and someone gives you the money for 12 months of magazines, but you haven't actually delivered the magazines yet. You're going to do that over the course of the year. So you've collected the money, but you haven't done anything to earn it yet. So it's not recognizing the revenue yet. So we put in this category called unearned revenue, which might seem odd because you think of a liability as like a bill or something. And you're saying, well, what is this doing? We've actually collected money. We don't have a bill. Well, that may be true, but you have an obligation, right? And that's what we're talking about with a current liability. You have an obligation to do something. And in the case of unearned revenue, it's not to pay something. It's to deliver magazines or to deliver goods, but it's still an obligation that's going to require either the use of current assets or creation of other current liabilities. In that case, that's going to be a current liability, this unearned revenue. And then also, a lot of times you'll see firms will have something called current portion of long-term debt. And basically this is, there might be some bonds or something that they've issued, and maybe they're 30-year bonds, but there's a part of it that's coming due this next year. They have to pay a percentage or a portion of that principal, or there's just some kind of amount that's due this year right now. Now, if they're going to finance that by issuing more long-term debt, then we go back to our definition. That's not going to be a current liability. But if they're going to use current assets, for example, cash, which is a current asset, to pay the current portion of their long-term debt, then this current portion of the long-term debt is going to be a current liability, even though it's associated with this transaction that's kind of long-term in nature.